taking its time here.
Yeah.
Okay, there we go.
Struggling a bit.
So we should be now coming to you live and true from the bowels of Australia in Tasmania. Well, it used to be once, Ash. This is where pretty much where Australia began its penal career, or
Oh,
colonies. Yeah, terrible, terrible times. And
yeah.
if we ever get the opportunity to do so, then on the west coast of Tasmania, there's a cruise type educational day that takes you out onto the island where the worst of the worst people who actually stole bread to feed their family and things like that, which is why they were
Well,
shipped to Australia in the meat place.
yeah.
Whoa, hang on a second.
You dropped off, mate? Are you still there?
I'm still here, but I've got
Okay.
my ear roll, so I might just throw it across to you and then come back
Yeah.
to me.
No problem at all. Okay, so we should probably not the worst thing in the world to start with the FTSE anyway. So let me see. Okay. Let's bring you this. So this is what we got currently going on with the FTSE 100. I don't see at this stage a whole reason to be buying or selling specifically, but obviously the trend is now to the downside. So, I'm already short in this market. It looks like the weekly pivot is now stepped up to kind of like match these this area of support just about, but this monthly pivot still really interests me as a potential target. So I'd like to see it down here before I'm having to do anything else. I'm slightly in management mode, but my the trade that I've been short on for a few weeks now is starting to work out. So I don't really need to do too much at this stage unless things start to bounce around here, which means I might have to do a little bit of micromanaging on this particular trade. But right now, the charts are pointing to the downside. The kind of sentiment that I would assume of the day, which is really kind of a bit of a spillover from a few different things. Coronavirus is still front and center, obviously. Earnings from the US also, I think, are interesting. And somebody just made a really interesting point, which is not that interesting, but obvious point, if you like. It's really earnings that drive equity markets, because if people are getting a return for their money, then obviously they're going to buy stocks. And the earnings season has been pretty good. I mean, not pretty good, actually. It's been a fairly standout earnings season. So no real reason for the stock markets to tank. But what's also interesting is that the um, the hangover from the coronavirus pushing into the next earnings season, which we'll look up later on, may well have a more significant impact, and maybe that's when we start to see things drop a little bit. So the markets have just opened up. Let's watch this on a 5-minute chart, just for a shade more information on the early price action and see where it settles. Right, now at this stage, I'm going to just let you know, just as we run in. So I've got a list of the top 20 stocks on my charts here, and we are currently around about 50-50. We've got about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's about 11 that are pointing to the downside, actually just creeping into a few more to the downside. So slightly heavy on the market when you come down to the most weighted stocks in the FTSE 100. So the downside looks okay to continue with. So if you want to get in short, this is another half decent area to try and do that. And because there's no evidence, actually pretty much all of them have dropped now to bearish territory. So the very, very first throw of the trades after the weekend are throwing the FTSE 100 lower, and that would probably see us down to the monthly pivot if we continue on this particular strain and trend. Don't see a whole lot of buying coming in as yet. There's one stock in positive territory, which is Royal Dutch Shell. Actually, you can make that two now, which is BT, which actually has been a fairly standout stock when it comes down to the other struggling performers. But the FTSE 100 continues to push to the downside. As I say, not the worst thing in the world to get in the short here. If you don't like this area, which actually you know, if I'm completely honest, I don't see it absolutely tanking from this area. It could happen, but the daily pivot looks like the obvious point, which is around about 30 pips above where we are now. So not to, it might not be a bad option to try and take it in at this particular point, but there's not a great deal of reason for going long at this stage either that I can see. We'll watch this fairly closely. Let's just do a quick rundown as well. The pound at this particular stage. If we
Speaking of the pound, mate, do you want to place that trade?
Oh gosh, you're back and ready to go. Yes, let's do that, buddy.
Okay, I've actually set it whilst you've been talking about
Brilliant
FTSE.
stuff. Okay, nice.
So I'll give you guys the parameters around which we now need to work. Okay, the sell order will be triggered at 128. My level back. 128.61. So 1.2861 will be the short entry. Again, for those of you in the room for the first time, not having been used to what we're doing here, this is a beta trial on trading the pound US dollar as the first candle of London session. And we're using the last candle printed on the hourly chart as our tradable candle, if you like, and we're putting an entry short 10 pips underneath it, putting an entry long 15 pips above it, and as soon as one of those has triggered the short or the long, we obviously close the other order, and then we start trailing on a 15-minute chart. That's the current parameters around which we're trading this, and I think we've got 2 weeks to go, maybe even a week to go in this trial of 3 months, and then we'll be attempting to turn it into something that makes sense as a tradable system. Okay, so today's levels, the short entry, as I said, is at, is at 1.2861. Stop loss is at 1.2911. And the reverse, of course, is the long order, which is long at 1.2911 and stop loss at 1.2861. That is that. So, Ash, I haven't updated the spreadsheet. Surprise, surprise. I'm hopeless at that. I promise before the end of the week we'll have an update on that spreadsheet just to see exactly where this is sitting as we go into potentially the last week. It might be the last week. I'm not sure if this one or the next one is the last week of the trial. We shall see. Righto, mate. What about the pound? What are we going to talk about the pound? Okay, I'll talk about pound. Ash can join me when he comes back. Pound, there it is. From an analysis point of view.
Sorry, buddy, I was muted. That was my fault.
Right,
yeah, the pounds. Well, it's been pretty heavily sold off, isn't it? To this particular point. I'm just sorry, mate. I'm just focused on the FTSE here because I'm looking at there's a little bounce going on, and I wonder whether there might be a little opportunity to take a little bit of a long here up to that daily pivot. Yeah, I think I might have to take it. I'm just taking a long here on the FTSE, short-term long. I'm just looking at this as a bounce. Sorry, I've got to fix this on my other charts as well. Oh, come on. Yeah,
hi, Lewis. How you doing, mate?
Not sure if I'm going to get this. Oh, man. Sorry, mate. I've got a chart which is just frozen up here.
You're right. You want me to continue, or do you want to take the
screen?
Yeah,
continue for a moment because okay. You got the screen, haven't you?
I've got the screen. So,
yeah,
guys, as Ash has just said, this has been very heavily sold off, broken through a few levels of support for me, and that's key. I think the latest level is pretty much the one that I won't say broke the camel's back, but it looks very, very strong to the downside. This is the daily chart I'm looking at. And where's the next level of support is the first question that I ask myself, because it seems to me as though we've gone through the top of the previous range that we're in, the bottom of the most immediate previous range that we were in, the trend line, importantly the trend line, and I don't see a horizontal level here until the bottom of this range over here, which is representative of around about 127.75, so 100 pips from where we are right now. Got a few pivotal support levels, if you like. The daily support level number 1 sits there, as does the monthly support level number 2, by the look of it. So it's very, very difficult for me to be thinking anything but hang on, wait till we get to here and then maybe look for some sort of bounce, because I'm not in the short. If I were, I'd be happy, because this looks very, very much a bear market to me. The only thing that probably you could consider as counter to that would be, we do have an untested weekly pivot. Well, guess what? It's Monday. That's not quite the emergency that you may think it is, but I'd be looking for price to get down to here before looking to maybe go back and have another look at the bottom of that range, the trend line, and of course the weekly pivot where there's a strong confluence area. So to me, it really has gone through a strong area of support, and in an emphatic fashion, because these candles look anything but bullish, I can assure you, and this one that preceded them, ditto. So yep, I'm thinking 127.75 would be the first level of okay, let's look for something to bounce off here, and I'm really not interested in getting into the market short, that is, until we get to here for that retracement. But I've got a funny feeling we won't see a dramatic or long time frame retracement until we hit that level. So that's the way I look at the pound at the moment. How you doing, Ash?
Yeah, I'm all good, mate. I'm all good. Yeah, I managed to get my my other system back on. So I've just taken a protective long here with the FTSE. I can show you guys what's going on. I'm not. I beg your pardon?
I say yes. Share with us. Yes.
Yeah. Let me show you guys what's going on. Now, I don't know. I'm not. It's not so much that I'm confident that we're going long. It's more the fact that I'm not confident we're going short. And I think it's going to be important to protect this. And I think that at some point it's going to bounce up here. So I've just protected it just a little bit at this stage. And I'm looking really to see what happens if we can get back up to the daily pivot. There's not a huge suggestion of a long, but when I'm looking at this chart here, then we're looking on the 5-minute chart. There's a little bit of indecision here going on. So my concern is, number one, the earnings situation, and number two, I have seen this corona situation really cause a gap to the downside of the market after a weekend, and that hasn't happened so far today. So it's literally just protection. I'm not suggesting that anybody should go long here at all, because it would not be my preference. If I was in a clean trade, I would not be going long here. So it's just a little bit of protection to the downside. If the market starts to break down, then I can take the long off the table, or at least allow it to establish itself a little bit, and then take the long off the table, if or just add to the short, just to kind of mitigate the other side of it. So yeah, that's what I've got going on here. Just kind of looking across the board at some of the barometers, S&P 500, the futures right now, kind of in a similar situation. And do you know what my issue is today, mate? I kind of wonder whether we're going to get a bit of a sidewaysy day today, as we get further news kind of filtering through.
On Corona,
and
you mean?
yeah, just a little bit on Corona, and maybe some other bits and pieces. Whether the flow of Corona has been mitigated, whether there's enough stimulus coming in from central banks, namely I suppose China, to buoy the market up. The earnings story is a bit of a counter for any moves to the downside as well. So I'm just wondering whether we just manage to hold on here, and even if we don't, whether we whether we hold on at a level at some level, somewhere around here. So yeah, I think dragging a shade lower and then popping up is probably my the at this stage what I'm seeing is that the most likely scenario. So that's why I've got it in, not because I believe in the upside at all. Looking at the S&P, it just looks similar to me. When I kind of look at this chart, it looks quite similar to the FTSE, maybe an inverted head and shoulders, and we might be right on top of the right shoulder here. So again, I wonder whether popping up to the daily pivot would be a better place to trigger some more shorts in. Maybe even popping up to the trend line and then popping down again might be a better place to trigger those shorts in. So yeah, I'm just not 100% convinced of the downside as yet. Same with the Dow Jones Industrial. It looks like it might have just created an attempt to create a higher low as well. And again, trend line has not been hit yet. And these are the areas that I'd be looking for it to test really in a sideways market. If it's coming down, it's coming down without testing any of this. But at this stage, I don't really kind of anticipate a huge amount of selling and a huge amount of buying, and that kind of puts me in range territory. Checking the other barometers, this is the dollar yen. Really, it's putting a higher high here. Looks to me like it's putting a higher high. That is not indicative of a market with a great deal of fear. Let's look at gold as well, which has actually, at 1574, it's doing pretty well. But as we open up the first 15 minutes of the trade with gold, it looks a little bit tentative. I'm not saying it looks negative, but it looks a little bit tentative whether it wants to go any higher here. So this is really just building the kind of the picture for me, mate, which is not really suggesting that that Corona is going to have the negative impact on the market today. This is the Aussie dollar, obviously.
That said, mate, I suppose we've got to take into consideration that it has now passed the SARS virus in terms of fatality.
Yeah. And this is the thing, that the headlines don't promote too much in the way of upside. There's no two ways about that, and that isn't really my question. It's more the fact that do I think it's going to collapse off the back of what is currently known, and I'm making the judgment call that I don't think it will. I don't think the FTSE will collapse on what's currently known, which is why I'm just getting that protection. But I still think that there's some downside in this market. But the question is, what's going to really push it down, and the judgment that I've made today that it's not what we've currently got. I think it's either more or it's a lack of possibly a lack of action from central banks and from Jerome Powell, which when we look through Forex Factory this week, which we will do right now, if I can bring up this.
A whole lot of talking going on world of finance this week.
Yeah. No, but I wonder whether that whole lot of talking, China had much more. Look at that CPI year on year from China. That's not really suggesting some downside with the central bank there. Preliminary GDP out of the United Kingdom could be interesting for the pound, and if that's negative, again, if that has a negative number, which they're forecasting a little bit of a dip down, then that may well also buoy the FTSE up a little bit as well. ECB President Lagarde speaking, and Fed Chair Powell. Now, I think this is the interesting one. The Chair Powell just testifying on a seminal monetary report before House of Financial Services Committee. I think that's going to be a fascinating data release, because he is obviously going to touch on the coronavirus, and I think people are going to be waiting to see whether he touches on anything that could actually buoy the market on that front as well. So
the big three within an hour and a half there, haven't we?
Yeah, exactly. 3 p.m. Yeah, so there's quite a lot really tomorrow. So again, I wonder whether that does actually promote some significant downside. So and again, look, he's out again on Wednesday, so there might be further information there. He is not out on Thursday, and he's nothing on Friday. Core retail sales on Friday could be of interest, but I don't think the fireworks are going to wait till then. So I think maybe the fireworks happen Wednesday, which again just kind of makes me wonder whether we might be in a little bit of a choppy kind of sidewaysy phase right now.
Hey, whilst you're there, Friday's numbers were interesting. A bit of to and a bit of fro. I would have thought negative for the US dollar in summary, but
yeah,
it's tough for me to be bearish the US dollar at the same time. So balancing act. I think it might be a fair bit of waiting to see what these dudes actually do have to say this week.
Yeah, absolutely. And just talking about the US dollar, this is the state of the pound. You know, in comparison, which again is going to be make things hard for the FTSE to move to the downside. But yeah, look at the pound here. Pound has broken through some significant levels, which we discussed yesterday on the show, and it doesn't look at this stage that the pound is going to get too buoyed. You know, there's no two ways about it. If we get down to 1.2760 or 1.2770 before that GDP data, then I would expect a bit of a bounce. But if we float around here, then it might be the GDP data which gets us down to that particular level. So I think 1.2770 is going to be seen before the week is done. So I'll be bearish the pound.
The level that I was just talking about whilst you were
right. Yeah. Bearish the pound, which again makes me a little bit tentative on thinking of any downside with the FTSE. And you know, the FTSE just caught here, mate. I don't see at this stage enough information which is suggesting to me that there's a trend. And now I'm looking at not many stocks in positive territory on the FTSE top 20, but we do have 1, 2, 3, 4, 5, 6 now, whereas there was only 2 when we first started. So there is probably something going on that suggests a little bit more holding on with the FTSE. And look at this on a daily chart as well. This looks like a very skinny little inverted head and shoulders. And if it holds on for the rest of the day, then there might well be some further upside to this level, testing the neckline one more time. So I think there's enough to suggest that we should be taking some protective moves here. Let me just check this trend line as well. Look at that too. You know, there's a little line along here which is just carving out some support. You know, and this is before we kind of worry about any of the hard levels of pivots and everything else. But little level of support along here. Little level of support along here as well, which is just about holding up, and then we've got this potential pattern as well. So, few bits and pieces which are suggesting to me that there might be a hold in the market this morning, mate, and that's why I'm just being a little bit more cautious than I'd like to have to be.
All right, mate. Happy days. No dramas. I've got some opinions. But really, they haven't changed a whole lot since last week. But we'll have a look at a few currency pairs, and I will share those with you if you so choose.
Yes, let's have a look.
Righto. Look, it's still all about the Aussie for me, to be absolutely frank with you, and the reason is because I think it's the easiest to analyse. That's kind of where I'm at with it. Why? Because, well, moving away from the pound, which we've already discussed, it's because of the situation in which Australia finds itself. And, you know, I'm not a fundamental trader by any stretch, but I do recognise strife when I see it. And the Aussie dollar, I can't see how it can be in anything but strife, given, I list them, you know, bushfires, now floods in Sydney. My own brother's house is wrecked by rain in the last, firstly by a big storm, and a massive tree fell through the roof, and then water's got into the house, and the whole 3 levels of his house are just gone. So he's homeless at the moment. He would be one of many people who are struggling through not only the fires that we've had, not only the drought that we've had, but now there's floods all over the place.
Man, what happens with that then, Jeff?
With what, mate?
Well, if your brother's homeless, you say?
Well, his home is wrecked, yes. I mean, he's got the wherewithal to survive that, but there'll be probably other people around the place who haven't. But my point is that there's just so much destruction and catastrophe.
So does that become a huge insurance job?
Oh, yeah, absolutely.
So insurance companies are going to be paying out, a crazy amount of money. Does that mean is insurance for that kind, for that kind of insurance in Australia hugely expensive in the first place?
I guess that's a matter of how you look at it. I think my personal insurance here on my home is less than $1,000 a year. So if I lost it, that's quite a few hundred years.
Yeah.
That I don't have to pay for. So in that
But
regard,
what would it be like in areas like where your brother is? Would it be more expensive?
Yeah, he's in a Sydney leafy suburb, if you like.
Right. Yeah.
And pretty expensive. Housing's pretty expensive there. So his premiums will be way above mine because of where he lives. But I think the whole insurance point is, and this is the only thing to my mind that can bring the Aussie back into some sort of, I don't know, rescue situation. I guess there's a pun there, no pun intended. What will and must happen, of course, with all this disaster going on, all the insurance claims that will be mounting up day, there's a different scenario every single day. All of those claims won't be underwritten here in Australia, of course. The major insurance companies around the world will be holding the ticket on all of those policies. Yeah. So I guess when it comes time to pay them out, there will be a flood of money exchanged from whatever it's held in now into Aussie dollars. So that will be the time where I'll be looking to trade the Aussie long or stop trading it short. Now, to put a time frame on that is almost impossible. But talking to Julian last night, where I think you had left the room, I'm not sure, he was saying with the New Zealand earthquakes, it took 2 to 3 months for all the insurance money to come back into the country. So what can keep the Aussie afloat till then is completely beyond me. It would have to be a disaster in the US dollar, I would have thought, and I don't see that happening anytime soon. So I've just got to be a bear, the Aussie. But to answer your question, insurance is going to cop a hit. There's no two ways about that.
Yeah.
Massively, absolutely massively. But what is massive in insurance terms? I really don't know, because they must hold so many assets, in terms of the paper against them, that the value must be crazy. But it's got to cause a ripple. Definitely got to cause a ripple. There'll be, billions upon billions of dollars being bought into Australia in the next 2-3 months. There's no question about that. Whether it's enough to rally the Aussie beyond 65, 67, wherever it is before that happens, I have got no idea. But I continue to be an Aussie bear, and I think last week we really got an opportunity to trade that with a rally. If you found a way into any Aussie pair, well done. This was the candle that I was looking at on Aussie US dollar, and I chose not to trade it because I didn't think the reward to risk was there. But I think I've probably got to, with the extreme bias that I do have, I've probably got to get over myself when things like that set up and say, well, okay, I'm prepared to take the poor reward. It was risky, no doubt. It was risky, given this is a very strong level of support that we're at, and if you don't consider that to be a strong level of support, then I've got news for you. It's a strong level of support. It appears to be broken, and that, similar to what we've just seen on the pound, that is going to be key. And I can already see the retest of that break, happening now, and has done all day. If I find any reason to actually get a short in here at some stage, I'll definitely be taking it. But it's got to be something that I trade rather than just something that the market sees whole as bulbs. And the market will be seeing this right now, bounce off the weekly pivot. And if this were to close below the daily pivot in particular, there's going to be a lot of people jumping into a sell here. I don't know that that's where I want to be. I'd much prefer to see it come back to the trend line again and then look for the short. There is confluence there as well. So I never say never, and I'm an extreme bear, but and these are exactly the same charts. The charts are all the same. Aussie yen or Aussie Swissy, I think, was going to be my preference last week. I think that remains the same. And we do have some sort of structure here that's suggesting to me that this false break is actually in play. Again, there are question marks over trading it because we've got an untested weekly pivot just below us. And that makes it extremely dangerous to trade. We've also got a higher low sitting here that we would have to trade through. So whilst there's plenty of room to take some profit here, and I take that on board, and I think that's probably not the worst position to take, and certainly not the worst place to be taking profit. In fact, I may well look for an entry into there at some stage. But again, we're sandwiched in between the pivots. So to go short here without the monthly pivot test is risky. So if I do go short, my stops are going to have to be up here if I'm going short soon. And if I am going short, I'll be clear of the weekly pivot. So it's a little bit, it's not just jump in here and free ride down to, 70 cents or whatever the case may be. It's just not like that. Aussie Swissy, probably a little bit clearer. It's the daily pivot, I suppose, is the immediate question mark. But we have had a monthly pivot test, so it takes that fear away from me. This trend line here is probably the one that I need rather than the one that I had. So traditional entries for me, include breaking resistance, then coming back underneath it and retesting it. That's not happening for me, and that's why I'm not in the market at the moment. But I'm keeping my eye on these things like an absolute hawk. I'm so bearish the Aussie that anything that looks like a trade for me is going to be acted on. But not just because I think that I have to see the setup, and as I say, simply it's not there. But they're the three major players. They will be this week again: Aussie yen, Aussie Swiss, and Aussie US dollar. Because nothing's changed for me. The only thing that has changed is, as I said before, the US dollar, and that mixed load of data that came out on Friday, NFP day, of course, on Friday, and not only that, of course, the numbers that come out with that are very important. And
I guess with gold as well, mate. Gold edging higher. It's going to surely have a positive effect on the Swissy.
Oh, well, you would think so. But these are the numbers that intrigue me. Wages down for the dollar.
Yeah.
But more importantly, and I think this one is a clanger, unemployment rate went up. And though we've been down low into the 3%, that still looks to be trending down, which is interesting. This may be the turn. I don't know.
You know what? I really like the fact you pointed that out, because that wages down is not particularly conducive for raising interest rates, is it? If they can't see, and the numbers have been good, and I do think they could go either way at this. I'm not saying they will. It's likely they go either way. I think that they either hold or go down, but I do think with the numbers the way they've been, they could justify a move either way. Because though the numbers have been pretty good, and then on Friday we had these numbers out, which were a little bit muted, but then the non-farm employment change is again a standout number, so they kind of got a little bit of counterbalance as well with the average earnings. So,
but I don't think that number is. I was going to say important. It is important, of course. It's the major event of the month for most financial analysts, if you like. But I don't think those two combined are in balance. I think they trump this, to be fair. And you don't have to look too far sometimes to get a bias. And if you look up just two lines, you can see the Canadian employment change, massive number or massive beat. I won't say massive number because it's just a little bit better than the previous. But this one here is really good. They're expecting the unemployment rate to climb, and it fell. So just looking at those 5 lines on the Forex Factory gives me a bias short US dollar CAD. So I'll be looking at that one as well. For that there is a little bit of a bias there on the numbers for me. So let me take a look at that. Where is the US dollar CAD in relative terms? There's the chart. So it's right on. It's right on resistance as well. I think this might be a potential sell throughout the week. US dollar CAD. I'd like to see the weekly pivot break and be broken. We've got a nice
Interesting, mate. Yeah, yeah. And I guess if we're looking at those numbers, then why not?
Absolutely. Break here and retest does get me interested. Big doji sitting there. Interesting. Suggesting that there is a momentum change on the way, perhaps. Okay. So there's something to look at, mate. US dollar CAD throughout the week, as well as the Aussie pairs. Let's talk about the euro. Oh, sorry, you want to talk about gold, didn't you?
Well, no, it was just really a point that gold, would help the Swissy. But interesting you say about the CAD, because one of our senior traders is looking at the CAD this week as well.
Bullish CAD.
Bullish the CAD. Yes, looking to go along the CAD. I can't say who it is because they have a Telegram, but you can probably guess who it is. But they are looking at the CAD this week. Yeah, but oil's not helping, is it, mate?
I'm keen to go short dollar CAD. Oil, not helping the CAD, no. And
no.
Probably that's why we're not seeing the CAD actually flying at the moment, I would have thought. Because the numbers out of Canada certainly appear to be no chart. Sorry about that, guys. Let's remedy that situation. Okay, so oil. Yeah, oil's anything but flying, and that's, as I say, that's probably a reason why the CAD's not flying as well. That looks to me, however, like a potential buy if we get back into here, if we get back above these lows. But this is very similar to the Aussie chart, very similar to the pound chart, in that we have broken strong support. So I think we're at a key level on all of these pairs. And as I say, if we get back inside the ranges, then okay, I can look to trade it long. But that will probably just underline or exemplify my interest in dollar CAD short, I would think. So I'd be more than happy if oil got back into here and headed towards the monthly pivot, mate. I think that would be good for me with my dollar CAD short buys. Euro. We should have a look at the euro before we go too much further. Actually, I better go back and check on the pound to see if we've been triggered on that, and then have a quick squeeze at the euro. Looks as though we haven't. What was the entry? 60, wasn't it? Yeah, no, nothing's happened there. So let's look at the euro, and there again, very, very similar to the other pairs against the US dollar that we have looked at. Broken strong support, but the difference with the euro, I suppose, is we're still at strong support, so we haven't broken through the most recent low on the bigger time frames. So that's going to be problematic, I would think, if you're looking to trade the euro short without a retracement. So don't think I'd be in that ballpark. Want to see it back to the weekly pivot, I think, before I look to trade it short. There's a little bit of space under here, but these wicks are very, very dangerous to trade through. I would have thought these ones here I'd like to see retested. So it's pretty simple for me. The trading opportunity will come only, I believe, for me, and I am and have been for ages short the euro from a bias point of view. If we get back to here, then I'll certainly be looking for more potential entries. But yeah, I think that's about it, mate. I'll have a look at the 30-minute charts to see if there's anything that I can look to trade in the near term. We have got new 30-minute bars, so why not? Look, I don't normally trade this particular scenario, but this is in dromedary territory, a double hump camel sitting up.
I haven't heard that one for a while.
Mate, I haven't seen that one for a while. Which is probably why you haven't heard it. But this is broken back below a recent resistance level. Let me have a look at that on a bigger time frame, how strong that level is. Yeah, there it is. I'm happy to call that strong enough to take notice of. So, and we're bang on it, right? So let's take a look at that 30-minute chart. and see exactly what we're looking at. We've broken below here, as in the last candle, and if we were to close up here, roughly engulfing this bar, I think that's probably a potential short. Your issue, of course, is the weekly pivot. Let me take a look and see if there's enough room to get some money off the table at that point. Looks tight, I'd have to say. So entry around about here somewhere. Sorry, not your entry, your stop loss around about here somewhere. So 10 or 11 pips of risk. Yeah, you've got about half that before you get to the weekly pivot. The problem will be by the time the spreads have kicked in, you've only got 2 or 3 pips available to you. So it's really tough to trade, I'd have to say, from that point. Yeah, it's ugly. I don't like it so much, I've got to say. The high risk option for that, of course, would be to trade it from the close of the bar. That gives you tons of room before the weekly pivot, but it's much higher risk in my book. But it does look like a potential double humped camel or false break of the daily pivot, if you like. It's not something I trade a lot, but yeah, look, I'll have a look when it closes, and if it is maybe a 7 or 8 pip candle, it may be worth just a little snipe to here, take profit off the table, move your stops to whatever profit you take here, and just let it go if it sets up. So Aussie Swissy, let me take a little, almost virtually be a replica of that, I can promise you. In terms of break and retest, the double hump, there it is. Off the monthly pivot, gee, there are worse ones than this one, I've got to say, but exactly the same scenario applies. We've got the daily pivot sitting here, maybe a little bit more available to us in terms of reward before we get there. So entry there, yeah, 1 pip more will be due. I'm just trying to work out a way I can get into this market, Ash. Maybe later if we get something. If we get something up here. So get up here, break it, then come underneath it and retest it, and then I can look to trade it short. If I look at the bigger picture on that, you can see what's happening. We're coming to the inevitable end of the pointy wedge, if you like. So something will give at some stage, and I'm tipping that will be to the short side. Always, for me, the best place to trade a short from is not from here, it's up here. So that's exactly what I'll be looking for, and that will be a common thread throughout. And I guess finally the Aussie dollar, beautiful bounce point, there's no question about that, but you've got to trust that this level is done with if you're going to enter there. So it's a little bit tough. Same applies. If I want to trade short here, the best place to trade short from is going to be here and not here. I'll look at one more, Aussie CAD. This is the one that I don't want to trade until we get back into a higher low situation. In fact, I really can't see me trading it at all because of my bias really short against the Aussie, and the CAD should be strong. So why would I want to go long Aussie CAD? I just can't. It doesn't make any sense to me at all. So I guess take out this low, or again, if we get a rally, wait for the false break of this trend line and go from there. So really everything's the same, mate. It's one track, and if one sets up, they're all going to set up, I should imagine, and it's then take your pick as A, which one's the best, or B, which one is the safest, and C, which one's going to give you the better return.
Yeah, well, I can tell from your tone, mate, that it's going to be one of those days where you're going to have to wait. I mean, we're in a situation over here with the FTSE. It has got kind of choppy, probably just about kind of weighted to the downside, but it needs to break some levels really to kind of convince me it's going to go there with some gusto. So I don't think there's too much else, mate. I mean, you know, the range in the FTSE has been fairly shallow, but it's still there right now. As I say, slightly weighted lower, and we may well start to edge down, but I'm just a little bit unclear, and I think rather than waiting for this market to kind of maybe meander about, I think I'd like to come back. You know, take 15 minutes, come back in the top of the hour, and see what it looks like then. So I think we can call it for the day, mate. Come
Yeah,
back
mate.
again tomorrow.
I'm happy to do that. Everything's clear. I don't need to elaborate on anything else. It's just a matter of wait until those setups come, and if they do, happy days. If they don't, then another week passes without getting into them. But yeah, look, I think we've got some reasonable opportunities if we get the right setup. So I'm looking to jump on. Good on you, LT. What's that Aussie yen, mate? I got out of that way early last week, but I think the rally. I thought the rally was coming, and it did. Just a matter of not being able to get back in. The time will come, I'm sure. The wise man said.
Absolutely. All right, buddy.
All right, guys.
Yeah, grand. Okay, guys. Yeah.
We will catch you back all tomorrow.
Yeah, same show time, same show channel tomorrow, 5 to 8.
5 to 8. That's a date. Don't you be late, will you? Have a good one, guys. Have a great week ahead, and we look forward to talking tomorrow. Bye-bye. Chris, to answer your question, it will always bounce off strong support levels because people will be taking profit there. I cannot see a single reason why the Aussie can rally from a fundamental point of view. Absolutely, your point is right. We are, and I think we're just getting towards clearing that strong support level. That was a key break last week. And if we look at that on the weekly basis, this is what we spoke about earlier in the show, where we are bang on that support level. We've had a look at it. We've had a look at getting clear of it. And now the retest is coming. So this is your profit takers. There's also going to be buyers here for whatever reason. There will certainly be stops here. There's no question about that. So there's going to be some sort of form of liquidity at that point. And, you know, to a large degree, we have seen that already in last week's candles, right? That's, you know, to me, the only reason why we rallied off that level. Now we've broken that level again, suggests to me that this selling is not done by any stretch, and I can't see any reason why it would be done. To me, it's got to be the weakest currency on the charts, so that's why I'm extremely bearish. Am I concerned that we are at a very strong support level? Not really. The reason is, yes, I'm seeing what I expect to see when we hit those levels, and that's why I got out of the trade that I was in. But we've now broken that level, so I can definitely see some more downside here. SPX 500 based on the HLW method on every third Monday when market opens. How do we place the take profit and stop loss possible to show an example? I don't trade it, mate, so I'm really I'm no authority. I believe the stop loss is 25 pips. Don't quote me on this. I believe the entry is at the open of the candle, and I believe the exit point is at the first positive close.
You got it, mate.
Is that exactly it, mate?
That's exactly it, yeah.
Right, yeah, I thought that was it. The only reason I don't trade it, I forget every single Monday that it comes. That's the only reason. I mean, to be honest,
it's a difficult one, really, because it's probably not something that we could discuss on this show because it's because we're running a free show, you know, by intents and purposes here, and that is something which you know, people have paid for in IFP.
Yeah,
it's probably something that you would need to have a private message about. Maybe, do you know what? That's something that you should maybe talk to Charlene about. Have a private message about, because we can't. Because if there are people watching on YouTube that haven't been through the program, then we are effectively giving away something that you guys are paid for, which isn't right. So yeah, we couldn't really do the S&P strategy. But Jeff's right; they are the parameters.
Okay, there you go. Questions answered. Guys, thanks for them, and we will catch you tomorrow. Bye-bye for now.